Are we going to see an altcoin outright mania over the next few months? Kyle Chase is a prominent figure here in the crypto space. He's discussing what institutional level ETFs might do to the crypto market and what they might not do. And some of the things that maybe we have overlooked over the last 6 to 12 months that could negatively impact over the next few months. I also want to take a look at some new generic listing standards that the SEC has rolled out to make it easier for institutions to file crypto ETFs. We're also going to take a look at Vanguard and some other institutions finally opening up the door for their customers to allow them to invest in these types of products. And I have a ton of other XRP related news and content, but I really want to start here with Mr. Chase.
So when we talk about alt season, remember this: retail is the gasoline. Without them, alts don't get the spark they need to light up, and the scoreboard stays dark. Now, we are seeing a little bit of a difference now with Wall Street coming in on board and these new ETFs that have altcoin exposure. I think the baskets are going to be super interesting. The ETF baskets that have multiple cryptos in it, right? And they will get some exposure, but probably nothing that's going to significantly move the needle. We really, really, really need altcoin mania to come from retail investors like you guys. Now, I just said, like, savings is in the gutter, debt is sky high, all-time highs. So retail just doesn't really have the money they have had in previous cycles. And I think that's why what we're seeing right now. And then we have a difference in types of altcoin seasons too, where in prior cycles, you didn't have like these pump fund value extracting things that really just took money out of the ecosystem and put it in the hands of founders, attempting to build real things. And some of them were. And then you had a lot of people focused on these projects that were promising to change the world and launching. So
what we saw over the last few years in the crypto space was ecosystems like Pump Fund, which allowed people, anybody even without experience in creating smart contracts and launching tokens, the ability to launch a token for a fee. And what we saw is an enormous amount of people scamming, robbing, thieving, promising, not delivering billions. I'd imagine tens of billions of dollars of retail money has been lost due to pump funds and these types of other scams that have been put out. 99% of those tokens, right, were issued by people that had no belief in what they were launching. They were just there to extract money from retail. And this is what's caused a lot of our altcoins to stay silent. This is why we haven't seen some enormous runs in the gaming sector, or AI is still doing really well, but there are other areas like real world assets and a few other things that we had expected to do better by now. And they haven't, because a lot of retail in the crypto space don't have money anymore. And the reason is because of some of these projects.
There isn't so much of a spread of attention. But do I think that there's still enough dry powder in retail's hands to cause a short-term mania? Likely, yes. And that's going to come from the green candles, ETH hitting all-time high, and the overall crypto market cap increasing. And even though if you don't have much money, if you see the markets absolutely rip, you might take a gamble and take out some debts, and this might push people further in debt to go play that last quarter of the altcoin season. And that's where I think we might get some mania that comes from.
All right, so right now with the US economy, things have slowed down. They have been slowing down for some time. And with current issues with trade and policy, we are seeing tens of billions of dollars, over $100 billion now, loss to American businesses. How is that going to affect either the stock or the crypto market going forward? Will it have an effect? Rates are having to come down now at breakneck speeds because the unemployment line is getting bigger and bigger and bigger. And the Fed has a dual mandate for unemployment and, of course, to bring inflation down. We're going to start printing money again and we're dropping rates. What do you think is going to happen? People will be able to borrow more, but they will be in debt more. And sooner or later, this debt cycle, you can no longer kick the can down the road. Now let's get back to what's going on here with the SEC. The SEC did approve generic listing standards. These standards allow exchanges to list commodity-based ETFs, including those tied to cryptocurrencies, without the lengthy individualized SEC review. So before a company had to go in, they had to file a 19B4 process, and then they had to file an S1 registration. And every time the SEC had to look at that product, they had to vote on that product to approve it or not. And it took up to 240 days, just pushing it back. Now the SEC has streamlined the process. If there is a futures market, there's a derivatives market for that cryptocurrencies, you can apply for a spot product. And so now any of these spot XRP ETF filings can now be approved We don't even have to wait for the October 18th or October 25th or November deadlines. They could be approved today if the SEC wanted to do that. And I think you are going to start seeing a lot more products approved. Now, which products will win and which products will lose, that'll be up to the communities backing those individual products and the adoption of those individual currencies. But I'd imagine anything right now that is going to be approved might be something you should keep your eye on here over the next few months. Now, we are seeing the CFTC, the SEC, the OCC, the Federal Reserve, the FDIC, all of them doing everything they can to roll out institutional adoption, giving clear rules of the road to Vanguards and your BlackRocks and your Bank of Americas and your JP Morgans. So crypto can be institutional levelly adopted here in the United States. So we can save tens of billions of dollars a year on moving value between our partner countries and our trade partners. Let me go ahead and play this.
If you're a Vanguard investor and you want to buy Bitcoin ETFs, you don't want to go to another platform. And nearly every major platform now offers Bitcoin ETFs. So I feel like this is a sign of times, a big shift, but still we're not sure. But when we talked to Vanguard, they said they're listening to clients, they're talking about it. So again, they're opening the window by a little.
Yeah, I mean, to me, what it sounds like is they saw demand from clients.
Yes.
And they want to make sure that clients stay on their platform to do what they want.
The ecosystem, right?
Exactly.
Yes.
Is that a fair assessment?
Yes. Eric was, again, he was the one who I talked to for this story. He said that, if Bitcoin ETFs weren't as successful, we may not be seeing this. But it's so hard to ignore the astounding success. I mean, altogether, the cohort has around 142 billion in assets. 80 billion of those is from BlackRock. 20 billion alone came this year. So you don't even see the demand abating. And with the SEC now, you might see more cryptocurrency ETFs to come and to.
All right, really quickly here. Vanguard was trying to stay out of offering these products to customers. Their CEO even went on national TV to say we're not interested, right? This was 6 months, 12 months. I don't know the exact date, but I remember him clearly saying that we're not interested. We're not going to offer these products. Fast forward to today, you have customers demanding these products. They have $11 trillion under management at Vanguard. That is an enormous amount of money. There's $53 trillion at BNY Mellon. That's about 25% of the world's assets, or especially here in the United States. But $11 trillion under management, that's a lot of people with a lot of wealth. And they want access to these products. And if they don't get access to these products, if you're a customer at whatever, right? A bank, maybe a fitness center, whatever it is. If a competing bank or fitness center opens up right next to the one that you go to, and this new center or whatever it is, right? X, Y, and Z starts offering better services, better hours, better rewards, whatever it is, right? You're like, why am I keeping my money or whatever at this particular bank when this bank is offering me so much more? That is the pressure that Vanguard was feeling. They were going to lose customers if they didn't adopt this technology. And that's what you're going to see across the entire industry. I don't think people realize how much money is going to come into this space over the next 5 to 10 years. Tens of trillions of dollars in capital. And who knows what that's going to do for our favorite altcoins. I'd imagine it's probably going to retire a lot of people hearing my voice right now. Unless you make a disastrous move or you get scammed or something terrible happens in your life, you're probably going to be extremely well off over the next few years. Getting there has been the hardest challenge of your life. Holding the asset while it appreciates has been one of the hardest challenges of your life, but you're almost there. All right, I want to go to a few other things here. Ripple X, it had 80% for over 2 weeks. It did get approved. MTPs are a new token standard on the XRP ledger built to meet practical needs for developers and institutions. MTPs embed metadata and compliance features directly into standards, giving issuers a simple way to create and manage assets. I did a full breakdown. This video would come out probably on Thursday. If you're interested in learning more about this, please take a look at that video. But it says for businesses, this means faster time to market, reduced operating risks, and easier integration with existing systems. For XRP Ledger, it means real-world assets secured on-chain, built for reliability, speed, and predictability of settlement. And it says you can read the white paper here if you're interested. It talks about issuers can enforce KYC and AML, which is the standard for banks and institutions. They can freeze or claw back assets if required. So if a bank or institution or something's happening that is maybe breaking a law of some kind, they're able to freeze that account. If their clawback means exactly that. You can claw back those funds. If you ever bought something on Amazon, you're like, hey, this is not what I ordered. I'm returning this. You need to be able to get your money back. That's part of being clawed back. Talks about adds metadata like bond terms or reserve assertions and manage distribution securely on multi-sig and escrow. All right, we know that David Schwartz is stepping down as the CTO of Ripple after 13 long years. The community has been reacting. We talked about this at length in Tuesday's stream. Let me play this for you, and I'm gonna give you some additional context on what's going on with David.
Wow, so some of the biggest XRP news ever just happened today. The Ripple CTO, David Schwartz, announced that he is stepping down at the end of the year. After 13 years at Ripple, he is stepping down. He does specifically mention that he's not leaving the XRP community, and he's been playing around with different ways he can get more involved. Is this good or bad for XRP holders? In my opinion, this is further proof of what I've been saying for the past year, which is XRP is moving into a brand new era. And this is further proof. We even have the guy who created and coded the XRP ledger stepping down. XRP is moving in an interesting direction. I'll be here outlasting everybody. I've been holding for...
Okay, it is proof. It is undeniable proof that we're heading to an all new place of something. Wait, isn't stepping down worse, bad? Oh, it's better? I don't know. This is a little bit confusing. David Schwartz said he's stepping down to spend more time with his grandkids and his kids. Also, he wants to be a dreamer and a developer and a builder again, right? I'd imagine that after 13 years and all of that travel, you see David Schwartz everywhere, all over the world, speaking at different events. That's got to be exhausting on the body. I just traveled for 35 hours and took me a week and a half to feel better. I can't imagine doing that nonstop, right? So there comes a time in a person's life where they need to take stock about what's going on and make adjustments. And I think that's what you're seeing with David. I don't think it specifically says that this is a reason why this is going to be good or bad for Ripple or XRP, or this is a turning point. I think it's one man making a tough decision, right? I'd imagine it's going to be very difficult. He's still going to be a part of the community. I don't know how Ripple replaces a person of that caliber at that role, but they're going to try to do just that. I really don't think there's anything other than that. I don't think there's any kind of like deep, dark things. I think David's, had his time. He's done an incredible job. Now he wants to go enjoy life. We should give him that. Okay, I thought this was interesting. The Riddlers, these people are just solving puzzles here. Remember, this was a community post here. And then so it says Bitcoin, XRP, USD, US dollar, yen, CNY, Euro XRP. Really interesting. And then they kind of break down all of the stuff. This looks like a solve to me. And then, of course, banks will not use XRP due to low liquidity. Well, what are we about to have a lot of? Well, it's liquidity.
Yeah, maybe to that, I mean, a big part of the value proposition of Ripple, I think, is the cryptocurrency, the XRP. Mm-hmm. I think that's another one worthy of debate. There we do find that the banks are also, at least when they talk to us, they may tell you different things, they are hesitant to convert things into a currency, a cryptocurrency right now, because of the volatility in the currencies, because of the fact that you don't have the deep liquidity that you have in, for example, the dollar as a clearing unit at the end of the day. So again, when we engage banks, we don't find them ready for a model where you convert it into crypto and then convert it back. And that has to do with many things, regulation, volatility, and all the things that are.
Regulation is here. Volatility, you're going to get less of that with more value, right? And you're also seeing XRP flip Bitcoin in South Korea, largest exchange up it. You're having XRP traded over Bitcoin in one of Korea's largest exchanges. Is this basically a page on what's to come? Are we going to see XRP, instead of representing 3 to 4% of the entire crypto market, is it going to represent 8%, 10%, 20%? As most of these other protocols die out because they don't have communities, they don't have use cases, and they just have broken promises, will more focus be on the assets that will be here for generations like XRP? You're also seeing some insane APYs. How are banks going to ever compete against these types of value? The Centaur Vault Euro Finance now delivers 9.7% APY. Now, there's always risk when you are giving your XRP or RLUSD to any third party. And you need to understand all those risks before you participate. Talk with a financial advisor. But when your savings account at your bank is offering you 0.25% and you can get 10% online instead of the 0.25%, what are you going to do? If that's $1 million in the bank, 9.7% is $97,000 a year for your money, opposed to the $2,500 your bank is offering you. It doesn't take a genius to figure out where this is going. 9% is a lot of money. Hello. And where are you on this list? Are you still trying to get somewhere, right? Are you in the 1%? Are you in the 0.01%? Do you have 6 million XRP? Unless you're Jake Claver, you probably don't. You know, where are you? Are you here at 2,300 or 8,000 or 10,000? Are you continuing to climb? Where are you? Tell me. No, just kidding. Don't tell anybody how much XRP you have, but I'd love to know, are you still grinding? Are you still buying? At what point would you stop buying XRP? At what price level? Let me know. Aloha. Bye.
Nothing in this video should be taken as financial advice. This is for entertainment purposes only. I am not a financial advisor. Please seek financial advice if you need it. Let's get back to the video.